Diamonds are more sparkly than ever, with the prices for natural rough diamonds expected to rise by up to 10% this year. Riding the crest of the wave is a miner which just last week announced it had sold a rare blue diamond stone for almost $28 million. We are chatting to Petra Diamonds this week on Resource Watch. Hello and welcome. I'm Nozi Pumbanjwa. Here's a roundup of news making headlines in the resource sector.
South Africa's government made it clear it intends to go ahead with a procurement of 9,600 megawatts of nuclear power. This after signing a cooperation agreement with Russian state-owned nuclear company Rosatom. This will see South Africa building large-scale nuclear power plants with Russian reactors. BHP Billiton is considering a secondary listing in London for its shares in its planned new company after some requests from UK-based investors. In August, BHP said it would spin off some aluminium, coal, manganese, nickel and silver assets worth an estimated $16 billion into a new company that would be based and listed in Australia, with a secondary listing in South Africa. Fuel storage and distribution facilities in Cape Town Harbour will get a 650 million rand investment boost over the next 2 years. This will see the expansion of the Bergen Cape terminal. The investment is a joint venture between Dutch-based storage group VTTI, Tebe Investment Corporation and Jakaro.
Petra Diamonds is a leading independent diamond mining group and an increasingly important supplier of rough diamonds to the international market. We're speaking to the CEO, Johan Dippenaar from London. Johan, thank you for making the time to join us. We've just seen your preliminary results, very solid numbers, revenue up by 20%. Maybe let's get a snapshot of the market right now and in particular prospects for demand.
Yeah, Nzupa, it was another year of very strong results delivered by the company, and the very compelling supply and demand fundamentals for the supply and demand of diamonds is very favorable. So we expect these conditions to keep on existing for the foreseeable future, and it bodes very well for our expansion plans to grow our current production from 3 million carats to 5 million carats by 2019.
Of course, there has been some concern that supply might not be able to meet the appetite that we're seeing from the traditional demanders of diamonds. Do you foresee your production targets perhaps maybe filling that gap and maybe keeping the price of diamonds within range?
Yeah, the additional 2 million carats that we will be upping our production by should be seen in the context of around 125 to 130 million carats per year production. So wouldn't be as bold to say that the growth in our production would very much change the supply and demand dynamics. But there's across the world, there's small expansion projects are on the go in northern Canada and so forth, and I think that for the time being supply and demand works well for now, but maybe 3 to 5 years out, without any new discoveries, we will see a severely constrained supply side.
And of course, Johan, you have indicated that you have quite sound production targets that you've set. Maybe talk to us about your operational pipeline and how exactly you're hoping to meet that target.
Yes, we have two major projects in South Africa, the Cullinan mine and the Finsch mine, where most of this growth will be delivered from. So across our portfolio of mines, we've been spending around 2 billion rands per annum on a capital expansion program. 2 more years of this type of spend will see us being assured of delivering that growth plan. So the programs are going very well, so we are very much on target to deliver that growth plan.
And just zooming into your South African operations, looking at your results, we can see that you're seeing some cost pressures in the South African space. Maybe just talk to us about what some of these cost pressures are and what's your game plan going forward to make sure that you keep these two within range?
Yes, as everybody knows who operates in South Africa, labor costs and electricity costs are our main concerns. We would very much like to see the whole country and politicians alike pulling together so that we can manage these costs much better. For our own company, these expansion programs will see us being able to up our volumes, combating those cost pressures, as well as a certain level of mechanization and automation that we'll see as we deliver these new projects.
Johan, turning to the broader picture in South Africa, in particular the regulatory environment, we've got a new minister in the portfolio of mines in particular. How do you find the operating environment now? There have been some concern that there's a certain degree of uncertainty. Is that playing out in your boardrooms and the discussions that you're having with your team?
Yeah, of course, as any person in business will tell you, investors do not like unpleasant surprises. So we all appeal to the government to keep regulatory framework predictable and consistent. Recent discussions that we've had at the Chamber with the Minister and other role players, we certainly feel that there's a much more positive mood and a willingness now to work together so that we can overcome these problems that we've seen in the platinum industry and that we don't repeat that across the whole South African mining industry.
And of course, you have had the fortunate experience of concluding a multi-year wage agreement with the National Union of Mine Workers. How have you had to rethink how you engage the unions as one of your key stakeholders to ensure that you keep any disruptions to a minimum?
Yeah, although these discussions with unions, most of the time they're quite difficult discussions to be had because of the historical or how the mining history has played out. There's a level of distrust between labor and management. In our own case, we feel that we've made great strides in concluding this 3-year agreement, starting to look at measures how workers can feel that they are aligned with our shareholders, and we feel that we have achieved some degree of that. We all have to keep on working extremely hard so that we can build that necessary trust. But I must tell you, as we've concluded this agreement, I'm very positive and optimistic that we'll see a period of stability now, and that it will bode well for our own delivery of our expansion programs and our production build-up.
And of course, to some exciting news, of course, we've seen the recent discovery of some rare diamonds, and in particular that blue diamond that was found. Maybe just give us a little bit of insight into how the diamond moves from being found to reflecting on your books. What kind of process does it have to go through?
Yeah, we have concluded a number of weeks of evaluating the stone. We invited the major players in the space of these special colored stones. They have all examined the stones, submitted bids to us. We evaluated those bids and decided, as you would have seen in the press, to accept a bid worth nearly $28 million, in which we retain a 15% stake in the stone. So I think that reflects our own belief that the ultimate polished stone, now the stone will go through a process of further evaluation and actual polishing. We believe that this process will yield further upside for the stone, as we will see 15% of those revenues when the stone is finally sold.
And maybe just looking quickly to that cooperation agreement that you've signed with Manica in Botswana. What are your prospects for that partnership? Well, how are you hoping this is going to play out in terms of production targets, for one, but also revenue streams?
Yeah, traditional exploration methods has always been very people and cost-intensive, people on the ground, chipping away, drilling and so forth. And this cooperation agreement with Manica, they've got some of the best mines in the industry when it comes to diamond exploration. So our portfolio of licenses in Botswana, together with theirs, we will be using that expertise to more cost effectively hopefully find ourselves discovering an economic kimberlite. In South Africa, we have put in a number of prospecting permits, and we hope to have those soon, so that we can build on this expertise that we now have within the company.
And finally, Johan, just before I let you go, understanding that you are seeing greater demand from the likes of the US and China, your traditional partners, but is there appetite from emerging markets and other developing economies wanting more diamonds?
Yeah, certainly. I think China has been the one story that's been told over and over the last 5 to 10 years. But we certainly foresee many other emerging economies like India, Turkey, Brazil, Russia. All these countries will become more and more important as many more middle-class households are added to those economies. And who can blame them? They are all looking to own a diamond. It's such a special thing to own. And so we foresee very strong demand in the years to come.
A bright future for diamonds. That's a very big thank you to the CEO of Petra Diamonds, Johan Dippenaar. Now, a fridge magnet is often a cute ornament used to post reminders or simply serve as a decoration. Most of us have them, but do you know what it's actually made of, or why these small magnets can hold so much weight?
A magnet is a piece of iron which has its component atoms ordered so that it gives off an external magnetic field. Modern Magnetics is a commercial and industrial magnetics company that supplies to a variety of businesses, such as the Fridge Magnet Factory.
Basically, we order a roll of magnetic material. For fridge magnets, we use a 0.6 millimeter. The roll weighs in excess of about 30 kilograms. I think I showed you a little bit earlier, a quarter roll was left and it's still got quite a lot of weight on it. All our design work is done on Coral Draw. From there it's exported to a RIP program which will basically manages the print, print directly onto the material on small quantities. The machine will cut it directly afterwards as well. Larger quantities we'll litho-print onto adhesive paper that is then laminated and then sent out to our die cutting factory. From there, they're basically packaged and shipped.
Producing more than thousands of customized magnets a day, one can see how attractive this metal really is.
That's it for this week's show. Do stay in touch following me at Nozi Pumbandra or at CNBC Africa. And don't forget that our show's hashtag is ResourceWatch. Until next time, from me and the team, it's goodbye for now.